you've got to look at it from both sides. So it's a bit of a money pot for the government. So they're taking their taxes. People were hoping that they would be reduced. They're actually increased. So what does that mean for the industry? It means a bit of uncertainty. When do we invest? What's our capex look like? Are there better options elsewhere, outside of the North Sea?
Hello, I'm Ed Reed, editor of E-FWD, and I'm here today with Paul Blythe from Crowe to talk about some of the challenges and opportunities for the sort of financial and capital markets, the opportunities, the challenges, everything that we might be looking at in the UK's oil and gas sector. So, Paul, great to have you with us today. I think there's clearly a big question around the North Sea at the moment. I think that we've seen some challenges, particularly over the last year, with the new government, deepening of the EPL. What sort of the future do you see for the North Sea and the windfall tax?
Good opening question. I think it's a challenging position for the North Sea, and you've got to look at it from both sides. So it's a bit of a money pot for the government. So they're taking their taxes. People were hoping that they would be reduced. They're actually increased. So what does that mean for the industry? It means a bit of uncertainty. When do we invest? What's our capex look like? Are there better options elsewhere, outside of the North Sea? So that's one point from the company's perspective. From the government's perspective, it needs to raise money from somewhere. So it's not from the North Sea. Where else is that cash going to come from? And that is, I think that's where the North Sea is at the moment.
I feel like in the last sort of few months, we've maybe seen some sort of some companies opting to leave, obviously, and sort of redundancies. But there are other companies that are teaming up. That we're sort of seeing some deals done, seeing some joint ventures. Do you think this might be people sort of trying to work out how best to make the sort of the best of a bad situation, as it were?
I think that's right. I mean, what we're seeing in certainly in the North Sea is a lot of M&A. So people buying non-core assets off the larger players. Larger players leave the basin, move elsewhere. They're selling their assets to people that can come in and purchase for a decent price. I think the opportunity is there for them.
And in terms of, I suppose, kind of attracting sort of international capital, as that's kind of obviously part of the game, do you think that there is still international interest in the North Sea, or is it a sort of a smaller pool, sort of more sort of mature players?
I think on the public side, London is struggling at the moment. You can read about it. There's been very few IPOs in the market this year. I think 5 or 6 is the number. Very few of those have been oil and gas. So where is the cash coming from? It's North America. It's Australia, Asia. People looking for those particular assets. Those assets may list on London, or they may go elsewhere to overseas markets. I think private capital is further afield than London. But if you've got something that can give you a yield that's going to be there for 10, 15 years, not necessarily thousands of barrels a day, but enough, then private investors will like that yield and they will stick with it.
And so I suppose thinking about that problem around the kind of the stock exchange, and obviously we've seen those, as you say, those IPOs drying up, and it feels like a kind of an ongoing kind of a crisis. But do you think that's a problem for the oil and gas sector? I feel like in a way it's maybe a sector that might be better aligned with that sort of private capital who can be, I suppose, sort of slightly further away from too much public scrutiny.
Yeah, I think what's attractive at the moment really for companies and the institutions is the transition piece, and it's moving away from the old hydrocarbons through to CCS, wind, hydro, those sorts of things, which their investors themselves at the institutions are looking for. So they have to stand up and say, look, we're investing your cash in this area, which is good for the country, good for energy security, as opposed to the old traditional hydrocarbons, which we know from the basin.
And looking at this kind of energy transition, for want of a better word, opportunities. I mean, we've been in Liverpool recently. We're going to Hull in October. Do you think that these kind of new industries that we're saying, sort of CCS, offshore wind, do they represent sort of similar opportunities to that sort of legacy sort of oil and gas? Is it new? Is it different investors? How does it play out?
It's a different risk, is what I would say. So you have the transition and transitional energy pieces coming together, which is actually a jigsaw puzzle. So there isn't one right answer. If you ask me personally, yes, we still need oil, we still need gas, particularly in the UK. But the new technologies coming in, from an investor's perspective, is does that technology work? How much is it going to cost me? When can it start earning revenues? And what's my return? And I think also that's a part of the problem with the basin itself is what's the surety that somebody investing now will see a return in 10, 15 years' time, with governments keep changing policies, tax rates, and so forth. So I think the new energy is attractive. Is it as attractive as it can be? Probably not at this point, which is why you see the majors moving certain of their renewable investments outside of their core hydrocarbon plays. You can see that in America particularly.
I mean, I think there's kind of a question there, isn't there, about whether those oil and gas companies should be investing in things like CCS, right? It's a different industry. They're doing different things, different costs of capital, different kind of questions around risk, around innovation. Do you think that maybe it's more of a sort of a play for sort of utilities or sort of private investors looking for that sort of long-term sort of consistent yield?
I think in my view it's better to separate them. I think investors like something that's nice and easy to explain, something that's easy to digest, unbox, and look at. And if you mix too many separate things together, people get confused. What is what am I investing in? Where's the return on the capital? And if you look at the box of tricks for the transitional energy, a lot of it is it's different price points, it's different capex requirements, it's different return periods. So what are you investing in? And if you put your pound into a company that does everything, where are those bits of pennies going?
Yeah.
What's the return?
And then I suppose looking sort of further afield, I think obviously one of the appeals of London has obviously been that way in which kind of international money kind of comes in and can be sort of distributed. Where do you see sort of opportunities for investors in London, in the UK, to look further afield? What parts of the world look particularly interesting?
We are seeing actually a lot of interest in the southern US states. So there's a lot of assets there that are moving around. They tend to be bought and sold fairly regularly. A lot of, shall we say, end of life production rates, which for somebody is attractive, but for others it's non-core. We want to go after something new, something that's exciting, something we can build value with.
Yeah.
Whereas, dare I say, the boring assets that are end of life, they just give a yield, and they are. If you get enough of those and you can produce at the right price, it's still valuable and profitable for you. And
do you think that London will continue to have that role in sort of channeling international flows of finance, right? Even if the North Sea is not, is clearly a basin in decline, whatever way that the government kind of slices and dices it. But do you think that London will have a continued role as a sort of a distribution point for capital?
Well, I hope so. Otherwise, I'm out of a job. Seriously, I think, where would you go in the US, in the world? You've got the US, you've got the UK, you've got Australia, you've got Asia to a degree, and it's cyclical. It depends on how far into the future you look. London at the moment possibly struggling, but 5 years down the road we could be sailing straight again.
Perfect. And that's probably a good note to end on. So listen, Paul, thank you very much for coming in. And I think some really interesting points there around capital and how the future is going to work out. I think there are those kind of questions ongoing around oil and gas companies, around where they're going to be investing and how they're going to be doing it.
Thank you for having me.
Thank you.